You're watching Trade of the Week with me, Ntaoleng Lechela. This week, boxer Sibanye-Stillwater, Tencent and BWX Technologies are up for analysis. Loyiso Mpeta, CEO of Mshindi Bingwa Group Holdings, joins us with his analysis of these counters. Loyiso, thank you so much for your time today. We're kicking things off in the retail sector, an industry that hasn't been particularly loved over the past few months, particularly those grocers. Just recapping on some of the trading updates, markets didn't like that, but we are looking at the technical side of things, and your pick there is Boxer. Take us through the charts.
Yeah, so Boxer generated a lot of interest in the market as it was spun off from a very underperforming Pick n Pay and listed as a separate entity, all with the hype of being a value creation spin-off. Now, typically what normally happens in markets is, even with the IPO hype, sometimes stocks don't always deliver to market expectations or relative to that hype. But there's something very interesting when I look at Boxer from a technical perspective. So we can see that the stock was separately listed in November 2024 and had a bit of a choppy trading, and then made this bottom in April of 2025, which coincided with broad global market bottoms in that period, which was when Trump was really causing havoc in the market with tariffs. And so we saw the stock bottom in April 2025. Now, what has transpired since then is very interesting, but also very textbook Elliott wave. So most companies, after listing, they tend to either crash or rally aggressively, or they take some time to really develop sort of market interest and direction. And when the latter happens, we see this type of trading, which I'm seeing in Boxer, where you have rallies followed by strong pullbacks, rallies, strong pullbacks. And with the nature of the overlap of the pullbacks with the previous peaks, gives us a classic leading diagonal pattern, which is characterized by these 5 waves. And now we have this pullback, which I am currently labeling for wave 2. Now we can see from this all-time high, the stock has only corrected 13% from the peak. But when you look at it from another correction perspective, using what is called Fibonacci retracement in Elliott wave, where we now look at this correction in relation to the entire rally, it's actually made a significant correction of about 50%. So looking at the stock from a technical perspective, I am very bullish on it, because we have a classic wave 1 correction for wave 2, and therefore the forecast would be for wave 3. Now, of course, the stock can continue to correct deeper, but what would be critical in that instance is that this low at 60 Rand has to hold. So from a purely technical perspective, I am quite bullish on the Boxer. But again, like I say, we all know Boxer. We know it was a shining light within that Pick n Pay group structure. So I think the market just needs to give it more time, and I think the technical picture is still favorable for some bullishness, at least in the short or rather medium to long term.
And it's interesting what you say there, because when you chat to a lot of retail investors, right, there's been so much concern around Boxer's share price volatility. But when looking at that technical picture, you do see some sort of bullish move going forward. And just maybe walk us through how you can tell whether, when you're looking at these dips and the pullbacks, how do you tell whether it's a healthy dip or something to be pretty concerned about?
So at this juncture, and this is typical with leading diagonals, that volatility that you're talking about is very true, and it's actually evident when you look at it from a price action perspective. You can see, even though the candles themselves are not exploded, the price action of Boxer has what we call very long wicks. Now, wicks are these very thin things that you see here at the top and bottom of the price action. So that is very visible. But what's important, irrespective of the depth of the pullback, and you can see the pullbacks are very, very sharp. What's important is that they maintain the technical structure. So you have this correction, it does not make a new low relative to this one. This pullback does not make a new low relative to this one, but this only makes sense when you look at it from an Elliott wave perspective. And this is, again, the power of the forecasting nature of the Elliott wave. So it will shake off what we call weekends in the market, the deep pullbacks. But when you look at it from a bigger picture perspective, then you can see that it's all within structure. So that is the edge that we get from using the Elliott wave principle in this context.
All right, let's move over to your second pick. You're going into precious metals. Now, this sector hasn't given a lot of investors much sleep because we've been seeing really high highs and really low lows. Not necessarily low lows, but coming off some of those highs we've seen recently over the past 2 or 3 weeks. Talk to me about where you're seeing value there, or perhaps what you're looking at picking on that front. I know you're going with Sibanye-Stillwater. Results were out on Friday, looking kind of good, recovering from some of those losses that we did see before. Just walk us through the technical analysis there and what's piquing your interest when it comes to Sibanye.
Yeah, so this is where technical analysis again plays a very important role in terms of our investment framework, because if you just look at recent market activity, you always have this tendency to suffer from what we know as recency bias, where you look at the most recent performance and you think it's just going to continue higher. The market narrative is very bullish on precious metals. We're seeing a lot of developments happening in the electric vehicle space. And all of a sudden, you're also seeing phenomena which rarely happens, where you've got palladium and platinum both rallying at the same time, whereas historically it's either one or the other, and they are seen as substitutes of each other. So you've got now this new market phenomena where both of them are rallying, which also bodes very well for Sibanye. But sometimes I like to really take a step back and look at the very, very big picture. And this is where I'm seeing reason for extreme caution when it comes to Sibanye, based on where the stock is at current levels.
Okay.
So looking at the price chart, and we're going all the way back to 2013 when the stock was listed, and I want to look at it from a cycle perspective. Just by looking at this stock, even if you're not in tune with technical analysis and looking at cycles, you can see something very, very evident. And we're looking at the price chart using monthly data, so very significant long term. You can see strong rally, strong pullback, strong rally, strong pullback, and now we've got a strong
Another
rally.
strong rally.
So let's put it now in time perspective.
Okay.
You've got a 39-month rally up 41 rand, so this is in rands. At 39 months, a very strong pullback down almost 85% over 23 months. Another massive rally up 73 rand in 44 months. Another massive sell-off down 82% in 35 months. But this is where it gets scary now. Rallied 71 rand, but in only 11 months.
Yes.
This is what we call a parabolic explosive move. Now, typically what happens with these moves is they tend to end up in bubbles, and when this bubble bursts in commodities, they can lead to another 80+ correction, which we've seen historically being the trend in Sibanye. So and also when you look at it from we had this massive peak here, and then a new peak which was just above the previous peak, and then this peak as well just above the previous peak. So we can see that within this price zone, say between 76 rand and 85 rand, you've got a very, very strong resistance. And also now when you dive in on the daily chart, you can see that this most recent rally, which began in February last year, has unfolded in a classic 5-wave advance. So again, we've got what appears to be a complete advance. We had this massive crash down 33%, and now we see price stabilizing a bit above 57 rand. Now the question is this all of the correction, or is this just the first leg of the correction? And this is where I'm saying price is a little bit in the middle of nowhere. It can go up, it can go down. I'm very cautious on Sibanye at current levels. So
what would you need to see to, I guess, be more confident when it comes to that share price?
It's a very long way away, but that would be a break above this 85 Rand 43. But I mean, then you're leaving a lot of money on the table if you look at where the current price is to where I would say, okay, this potentially being, say, a wave A, being invalidated. So this is where, again, uncertainty just becomes part and parcel of what markets are all about, irrespective of how a textbook the previous advance was. Where we are now, it's a very, very gray area, and massive uncertainty and risk resides. So this is where sometimes sitting on your hands becomes the best strategy, or if you are prepared to nibble on the stock, you either have a stop loss or you use other instruments like options which cap your downside. But that is a whole other strategy that one can use. But where the stock price is now, it can really go in either direction. So I'm very, very cautious when it comes to Sibanye.
I think you're one of the few people that are cautious when it comes to some of those PGM counters, because all we're hearing is buy, buy, buy. So it's great to hear such a different opinion.
And optimism always peaks at market tops.
Yeah, you're absolutely right, because that happened about 2-3 weeks ago when we saw that correction, when everyone was really piling into gold and PGM, and in a few days we saw the correction. Yes, they're back, both PGM prices and gold are back to prices around 5,000, gold that is, but we did see that correction when everyone was piling in. All right, let's move over to your next stock. You're going international now with Tencent in China. Of course, local investors have access to this counter through NASPA's process. But yeah, let's get your analysis on Tencent and what the charts say on that front.
Yeah, so Chinese tech stock has sort of slightly underperformed relative to US peers, especially since the explosion of AI back in 2022. And we can see Tencent bottomed in October 2022 during that period of ChatGPT being released. But I'm seeing a very strong price structure from this October 2022 low, and that is an unfolding 5-wave advance, and currently the stock seems to be at a very mature stage of wave 3. So diving deeper on the daily chart or weekly chart, I'm seeing again that classic wave 1, wave 2, and wave 3 seems to be unfolding as an extended 5th wave. So currently we've got wave 1, wave 2 complete, and price now seems to be advancing, though in a bit of a choppy nature for wave 3, and then the forecast would be wave 4, wave 5 to complete this wave 3, and then a pullback for wave 4, further advance. And also we can see price has got this trend line which is forming here, so it will be interesting to see what price does at this trend line. So even if we get a deeper correction, I think the bigger market structure for Tencent is to the upside. So the strategy here is buy the dip, but wait for price to at least give a bit of a turnaround before you start nibbling.
Okay. And then lastly, we've got BWX Technologies. That is, before we get into the charts, maybe take us through what the company does. I know it's within that defense energy space.
Defense, aerospace, nuclear power, atomic bombs, nuclear energy, nuclear bombs as well.
So important to the US.
And you know how America is invested in its military complex. So it is a classic American military complex company, big government contracts. So very, very solid in terms of cash flow generation, those contracts, revenues, margins. It's a classic American war machine company, if I can just call it that.
So fundamentals to the upside, I guess.
Fundamentals to the upside. You don't even have to worry about that one there. So technically, going back to 2011, textbook wave 1, wave 2, wave 3, wave 4 triangle, and then massive rally for wave 5 for a higher degree wave 1. Very healthy pullback, 38% for wave 2. So I'm looking at this rally as an unfolding higher degree wave 3, currently wave 1, wave 2. So a very, very bullish outlook. So looking at it now from a daily perspective, wave 1, wave 2, and then we had a very strong third wave also unfolding in 5 waves, and then pulled back for wave 4, and then the wave 5 for higher degree wave 1, which then means that this is wave 2. So I'm looking at this as the very early stages of a potentially very, very powerful third wave. But if it does pull back, then the invalidation level would be at this level here at 164. But if we see this level holding, then further upside for third wave. And like I said, the fundamentals very, very solid. The cash generation of this business and the profit margins very, very solid. So technically, I'm also very, very bullish. So yeah, that is it for BWX. Straightforward bullish wave. But like I say, it can correct deeper, but then it would provide a buy the dip opportunity. I'm not even looking at it as a potential invalidation back at 84. Yeah, I think it's
so a long-term view here.
Long-term, extremely bullish. Very, very bullish on BWX. Yeah.
All right, let's leave it there, Loyiso. Thank you so much for your time and taking us through those counters. That was Loyiso Mpeta, CEO of Mshindi Bingwa Group Holdings. And that's all for this week's Trade of the Week. But stay tuned for lots more coming up right here on Business Day TV.